Hi, hello, namaste, hearty, welcome to yet another I Lead Tax Talks. So, today we are answering, one of the common questions that I keep getting, on my WhatsApp, email, or after every webinar. Nandaji, my spouse is on L-2 visa. Can she start a business in the USA? Can she do consulting? Is it legal? And things like that. See, the answer is going to surprise many of you. But before we begin, friends, let me do what every responsible tax professional must do. Everything that I share today is only for educational purposes. Okay, it is only for educational purposes, and the presentation is not legal advice, not tax advice, not immigration advice for your specific situation. Under US Treasury, Circular 230, even if my students are watching it, nothing here can be used to avoid IRS penalties. Watching this video does not create a client relationship between us, okay? And here is something very important, very important. Immigration rules and tax laws, they change. Now, what is true today may be updated tomorrow or get outdated, the day after tomorrow. So, before you make any business tax or immigration decision, please verify, with a licensed enrolled agent, CPA, or a immigration attorney. Okay. Now, why do I say this so seriously? Because, friends, I have seen families make five-figure mistakes also because they followed some article somewhere, some blog somewhere, some WhatsApp forward blindly. So, your situation is unique and your visa history is unique, and your state is also unique. So use this video to get educated and then get a personalized advice. Yeah, deal. So I've put all the details in the description section in case you want to get in touch with me or my team. We'll be more than happy to help you. Yeah, but I encourage every one of you to learn from this video and please do share it with somebody whom you know and you feel that they need this. Okay, chalo. Now let's get into the good stuff. Now, see, I have put the title, Can an L2 visa holder start a business in the USA? So, here is this big question that I often keep getting. Now, let me tell you why this topic is so close to my heart. Now, over the years at Iley Tax LLC, or even in my earlier years, in the US tax industry, I've worked with hundreds of families. I should say thousands of families, especially from India, L1 families, H1B families, green card. And I have noticed a pattern here. The L1 professional, usually the husband, sometimes the wife, they come to America on a intra company transfer. Big company, good salary, busy life. And the L2 spouse, often a highly educated person, an MBA, could be an engineer, a chartered accountant, a teacher back in India, sitting at home and wondering, what can I do here? Am I even allowed to work? Yeah, I'm sure husbands can relate. And most families assume the answer is no. They assume the L2 spouse must sit idle or wait years for a green card. So, friends, that assumption is costing families lakhs of rupees. Sorry, I mean tens of thousands of dollars. So, today we will cover these three things, the visa side, what the law actually allows, then the tax side, how a spouse business creates real tax advantages, and then third, the wealth side, how L1, L2 families can build long term financial security in America. Okay, so before we start, you can you can just keep a book or pen handy in case you want to note down anything, note it down, or if you're watching it on your mobile or iPad, try to take a screenshot wherever you need to. Okay, let's go slide by slide. Now, one visa, one family, one big opportunity, right? Let me paint a picture here. See, imagine a typical family, okay? Uh, let's call them Ravi and Priya, okay? Not real clients, just a story we see all the time. Ravi gets his L1 transfer from Bangalore to Seattle, Washington. Big moment. The whole family celebrates. Then Priya, who was working as a finance professional in India, resigns from her job, packs up the house, and they move with their two children. Now, 6 months later, what happens? Ravi is doing well at work, but the family is running on only one income in one of the most expensive countries in the world, United States of America. Rent is high, groceries are high, the children's activities cost money, and Priya, a talented, experienced Priya, is at home, her career on pause. Now, here is the key insight, on this slide. I want you to really hear this. The L1 keeps you here, but the L2 can help the family grow financially. The L1 keeps you here, but L2 can help the family grow financially. See, the L2 dependent spouse can work, can consult, can freelance, can even build a real business. This creates a second income stream, meaningful tax advantages and long term financial independence also. And friends, this is not a loophole. This is not some gray area, what we call jugad, right? It is the law written in black and white, in the US CIS policy manual itself. So I'll show you exactly where in the next slide, okay? The tragedy is that most families never fully explore it. Why? Because nobody told them. Well, today I'm telling you. Have you ever thought about this? Has anyone ever told your family that the L2 spouse might actually have more business flexibility than the L1 holder? If you are thinking, nobody told me, then this is news for you. Chale. Now, yes, an L2 spouse can start a business in the USA. Let me read you what the law says and then let me explain it in simple English because legal language, can be confusing. Mm. See, an L2 spouse with an unexpired I-94 showing the L2S designation is, and this is the magic phrase, employment authorized incident to status. Employment authorized incident to status. Now, what this incident to status mean? I'm not an immigration guy, but little research that I did, I'm just sharing it. Let me explain this with an analogy. See, think of it like this: when you buy a house, you don't need a separate permit to use the kitchen, right? The kitchen comes with the house. So, similarly, for an L2 spouse, work authorization comes with the visa status itself. It is built in. Is that clear? This means no separate EAD card is required as for a H4. Before 22 to 23, L2 spouses had to apply for a separate EAD and wait for months. But that changed. Today, if your I-94 shows L2S, that S stands for spouse, you are work authorized automatically. Now, three very important cautions. Okay, three important cautions. One, check your I-94. Okay, check your I-94. Go to that i94.cbp.dhs.gov and look at your class of admission. It must say L2S. If it shows old style L2 without the S, talk to your immigration attorney about getting it corrected before you start working, because this document matters. That is one. Now, two, this applies to spouses only, not children. L2 children cannot work. Please do not confuse this. Is that clear? I repeat, L2 children cannot work. Next, three, you must maintain valid L2 status. You must maintain a valid L2 status. See, if the L1 spouse status ends, your work authorization ends with it. The kitchen only works while you own the house, right? The kitchen belongs to you only when you own the house. And notice on the slide, there are two ways to participate in a business. As a passive investor, you simply own equity and receive returns like owning shares. Then, as an active manager, you can run the day to day operations, invoicing clients, managing employees, everything. The L2S spouse can do both. Now, why this matters now? See, let's talk about why this conversation is urgent. Not someday, not next year, but right now. Okay. See, look at these numbers. US CPI, the Consumer Price Index, which is how the government measures the cost of living. It increased, 4.2% over the 12 months ending May 2026 recently. And consumers' 1 year inflation expectation rose to 3.7% in June 2026, according to the Bureau of Labor Statistics. Okay, good, Nanda, but why do these numbers, matter to my family? Now, let me make it real. See, 4.2% doesn't sound dramatic, right? But inflation compounds, just like interest, but working against you. See, what $100,000 covered in 2020 may require significantly more today to maintain the same lifestyle. See, I keep talking to my clients almost every single day in the tax planning sessions, for the tax planning consultations. And they tell me, Nanda, rent went up, groceries went up, daycare went up, health insurance premiums went up, and that famous Costco bill. Every family tells me about the Costco bill. Went up. And here is the squeeze, that L1 families feel most. Your salary is negotiated once, maybe, adjusted once a year, but your expenses are adjusted every single month. When one income powers the entire household, the visa, the rent, the school, the savings, the money sent to your parents or relatives in India, There's no cushion. Am I making sense to you? And this is where, a second income stops, being a luxury, and it becomes a strategy. Not just for spending, but for saving, for investing, for retirements, for kids, future. And as we will see later, for genuine tax planning also. Now, let me share a pattern we see constantly, families who add a spouse led business of even 40,000 to $60,000 a year change their entire financial trajectory, not because of the income alone but because of what that income unlocks. So hold that thought, we will come back to it in a while. Now let's understand this. Let's understand something that shocks almost every family that I explained to. In most L1, L2 households, everyone focuses on the L1 holder's career. The L1 person has the big job, the big salary, the corporate badge. But look at this table carefully, because when it comes to income flexibility and business building, the L2 spouse actually holds the stronger cards. Let's walk through it. See, one is work authorization. See, the L1 holder can work for one employer only, the sponsoring company. That's it. But the L2 spouse, the work authorized incident to status, L2S, meaning open market. Any employer, any employer, or no employer at all, their own business. Freelancing, L1 holder, not permitted. If an L1 employee takes a side consulting gig on Upwork.com, that's a visa violation. What I know. And I have to say this loudly, friends, because I get this question every week. Nanda, can I do a small side project on my L1? No, no, no. That side income can jeopardize your visa status and your future green card also. But how about the L2 spouse? Fully permitted. Fully permitted. Now, owning a business, L1 restricted. L1 restricted. L2 allowed. Consulting income. L1 cannot do independently. L2 legal and flexible also. Income control. The L1 salary is employer controlled, but the L2 spouse income is self directed. They set the rates, choose the clients, decide the hours, and tax planning leverage. This is my favorite row, as a tax strategist. A W2 salary gives you very limited planning room, but a business gives you significant opportunity. Deductions, retirement plans, entity structuring. So, we will spend the rest of this video unpacking that word opportunity. Opportunity. Think about the irony. See, the dependent visa is actually the independent one, for business purposes. The L1 husband is locked to his employer, while the L2 wife can build an empire. God has a sense of humor, and so does immigration law. Now, let's see what type of businesses, can an L2 spouse start, and what legal structure should it live in. Okay. So, let me explain the three structures on this slide using a very simple analogy. Think of business structures, like vehicles. All of them can get you to the destination, but they suit different journeys. Different journeys. Now, first, the LLC, the limited liability company. Many people say limited liability corporation. No, limited liability company. See, this is the reliable family car. Reliable family car, like Maruti in India. Most popular, starting point. Flexible, simple, low cost. And an LLC does, two beautiful things. It separates your personal assets from business risk. And for taxes, a single owner LLC is what we call a disregarded entity. Getting it? Disregarded entity. The income simply flows into your personal tax return through Schedule C, a worksheet. No separate corporate tax return is needed at the federal level. Easy? And by the way, what is sole proprietorship? That is business without any vehicle at all. Just walking. So you can freelance your own name, no registration. It works, but there is no liability protection. And that is why most families upgrade to at least the LLC. Getting it? Because sole proprietor, you are doing it everything in your name, personal. But LLC, you become an entity. There's an entity. Okay. Next. Second, the S corp. The S corp. Now, this is a fuel efficient car. We are talking about different vehicles. No? It's a fuel efficient car. It can save on self employment taxes once your income grows. But, but, look at the warning on this slide. An S corporation shareholder must be a US citizen or a resident alien for tax purposes. An L-2 spouse qualifies only after meeting the IRS substantial presence test relating to residential status. Generally, being physically present in the US, no, I mean, long enough to be treated as a tax resident. Now, if a non resident alien holds S corporation shares, the election is invalid according to the Internal Revenue Code, and the whole structure, collapses. So, because non-residents, they cannot be members of the S corporation. It's only for green card holders, US citizens. Now, when you include a non-resident into an S corporation, as I said, the whole S corporation structure collapses. And this is a trap that even some tax preparers miss. And we will do a full slide, on this shortly. Now, third, the C corp. This is the truck built for heavy loads, for scaling ventures, investor backed startups, venture capital, and most L2 service businesses do not need this, initially. Now, what kind of businesses can an L2 spouse do? Look at the categories: finance and admin, bookkeeping, payroll support, tax admin. If you are interested, get in touch with me. If you go to YouTube, type Elite Tax Academy, Nandakumar, TV9, and things like that, you will see me on most of the news channels, because 100 clients like you, they create one job for my student back in India. So thank you very, very much. If you are my existing client, thank you very, very much for creating employment for my students with your business and with your referrals. And also to all the corporate leaders who have recommended us in their company as part of the employee benefits program. Thank you very, very much to you too. We are so grateful to you. Now, so finance and admin, you can pick up, if you're a finance person, you studied BCom, MCom, MBA, something, in India, and now you are in US, think of these courses also at Elite Tax Academy, or, anything, any course, that is relevant to you. FPC, Fundamental Payroll Certification, CPP, Certified Payroll Professional. These are all payroll courses, which can help you. And you can check, online or in AI, how these courses, can help you, and you will get, more information than what I'm telling. Because I'm a finance guy, I was more inquisitive, to share information about that. Now, then you have technology and digital. So at least 60% of our clients are all IT people. So get into IT consulting, digital marketing, e-commerce, content creation, anything. Then consulting and coaching, HR consulting, online tutoring, music classes, cooking classes, bakery, leather business, handbag business, clothes business, even franchises. And please note, the yellow box here at the bottom, every deduction. I would suggest, you watch it on a big screen, this thing on a TV or something like that, or a proper laptop, so that you don't miss on the content. See, every deduction must pass the IRS ordinary and necessary test according to the Internal Revenue Code. And that business must be real, not a hobby. And also, state rules vary. Now, California, for example, it charges an $800 minimum franchise tax on LLCs every year. So even if you make zero profit, you still have to pay the franchise tax. You cannot say, I didn't make any money, so I'll not pay franchise tax. So know your state, before you file your paperwork also. And that's why you need people like us. Yeah. Now, next. This is the slide, where people usually say, Nanda, this is nice in theory, but what would my spouse actually do? Now, here is the principle, at the top of this slide, and it is golden, my dear brothers and sisters. Service businesses are the easiest and fastest to launch. Service businesses are easiest and fastest to launch. Why? Three reasons: low startup cost, no inventory, and high demand. You are selling skills that your spouse already has, right? Let me tell you, about a pattern I see all the time. See, a spouse comes to America with 10 years of accounting experience from India. She thinks my Indian experience doesn't count here. Wrong. Wrong. Small business owners, or businesses in America are desperate for bookkeeping help. If you go to Elite Tax Academy YouTube channel, you will see so many videos that I have made, even for the pregnant mothers and all. Because she learns QuickBooks, maybe 1 2 month certification program, and within a year she has 8 small business clients paying monthly retainers. So from zero to a real practice, right from her sofa or dining table. Look at the three categories here: financial services, technology and marketing, education and coaching. See, the common thread: every one of these can begin generating income within weeks, not years, maximum months, while maintaining your full visa compliance. So start small, invoice professionally, and you give good service, referrals will come. Referrals will come. So find out which category fits your family. Is it finance? Is it IT? Is it education? And get in touch with me if you need more help. I'll be able to guide you. Now, why an L2 business is financially powerful? See, because a spouse owned business is not just about extra income. Look at this slide, it creates 6 layers of financial advantage. Think of it as a strategic financial engine running alongside, the L1 career. Layer 1, second income stream. It's more than money, it's diversification. If the L1 job, God forbid, has a layoff, a restructuring, a visa issue, the family is not at zero. Ask anyone, who lived through the tech layoffs, how much that peace of mind is worth. Then layer 2, business deductions. A W2 employee earns, pays tax, then spends. A business owner earns, spends on legitimate business needs, and then pays tax on what remains. That sequencing difference, is the foundation of all tax planning. Legitimate expenses, they reduce taxable income. Dollars saved are dollars earned. A W2 employee, he buys an iPhone or iPad or iMac. Though he says I paid, he cannot claim it. on the taxes. But a L2 person, he can, she can. She likes something for the Thanksgiving. Go to Best Buy or any other online shop, you purchase in your business name. You can claim that as a deduction as long as you are able to show that it's an ordinary and necessary business expense. You can claim it as a business expense. Then layer 3, retirement planning. This one, friends, is criminally, underrated. Business income unlocks a solo 401k and SEP IRA. Retirement accounts that are simply not available to someone with no earned income. A non-working spouse has very limited retirement options. A business owning spouse can shelter tens of thousands of dollars, per year. Full slide, on this coming up. The numbers will amaze you. Then layer 4, wealth building. See, business profits plus retirement compounding over 10, 15, 20 years. This is how, generational wealth is actually built, not lottery tickets, compounding. Then layer 5, professional identity. Professional identity. And friends, this one is emotional, and I have seen it change, lives. The spouse who ran a business here has US clients, US credentials, US references, career momentum maintained, confidence maintained. And when the green card comes, she doesn't restart from zero. She just accelerates from where she is. Then layer 6 is long term independence. A business is an asset that survives visa transitions, green card applications, even a return to India. See, quick recap of where we are. We established that L2S spouses are legally work authorized. It's in the USCIS policy manual. We compared L1 versus L2 flexibility. Then we covered business structure and ideas. Now we go deeper into part 1, into the part that I love the most, the tax strategy. Okay, stay with me. No, I made it detailed. Sorry. Yeah. So take time. If you need to break, you can take a break. Yeah. Now, the tax benefits of running an L2 business. Let's understand business deductions properly, okay? Because this is where most confusion and most abuse happens. The IRS says a business may deduct all ordinary and necessary expenses. Two words. What do they mean? Ordinary means common and accepted in your type of business. Necessary means helpful and appropriate for the business. Notice it doesn't say essential or unavoidable. It says helpful and appropriate. Let me explain, with an example. Imagine an L2 spouse running a bookkeeping practice from home. What becomes deductible? Equipment, right? The laptop she works on, the second monitor, the phone she calls clients with, the printer, if it is used for business, the business portion is deductible. Then home office, a dedicated workspace in the home. Notice the word dedicated. This must be a space used regularly and exclusively for business, not the dining table, where the kids also do homework. A proper home office, can generate a deduction based on the square footage of that space. Then connectivity, internet, software subscriptions, QuickBook license, Zoom, cloud storage, all the business use portion. Next, growth, marketing costs, the website, training courses to upgrade skills, professional fees, including, yes, the fees you pay to people like us, your tax planners. Now, and even attorneys. Now, here's why, this matters so much. Every legitimate deduction reduces the family's taxable income. For a household, where the L1 spouse earns a high salary, the family may be in a high marginal bracket, so a dollar of deduction can save 30, 35, even more cents, when you add state tax. The same laptop the family was going to buy anyway now carries a business purpose and a business deduction also. So, ladies, if you want a new phone or a new laptop, a new tablet, you know how to ask now. Legally also. Now, yeah, let me go to the, let me give you a warning here, okay? I need your full attention, for this slide. Now, there is bad advice, circulating in our community, probably on WhatsApp groups, at dinner parties, sometimes even from colleagues. Okay. It sounds like this. Array, just open an LLC, then you can deduct your car, your phone, your vacation, everything, becomes a write off. That advice is wrong. It is dangerous and it can cost your family far more, than it ever saves. Now, here is the IRS red flag, on this slide. Opening an LLC solely for deductions with no real business activity, it's a compliance risk. The IRS may disallow every deduction and assess penalties if there is no genuine profit motive. Remember that. Let me explain, the legal mechanics simply. I'm a tax teacher, but still, let me try to explain it in a simple way. See, the IRS has what we call the hobby loss rules. For students, section 183. Okay. If the IRS determines your business is really a hobby, no real clients, no real revenue effort, no intention to profit, they can eliminate all your deductions retroactively also with the penalties and interest. Yeah, that clue. So, what does a real business look like? Four markers, okay, in case you are writing it down. One, genuine business activity. Real services rendered, real clients, real invoices issued. If someone asks, who are your clients? You should have an answer. Two, a separate business bank account. See, never mix, personal and business funds. This is the single fastest way to destroy your credibility in an audit. And it can pierce your LLC's liability protection too. Three, active bookkeeping. Track income and expenses monthly with proper software, not in a shoebox, of receipts. Then fourth one, profit intention. You must genuinely, intend to make money, not just, offset taxes. The IRS looks at behavior also. Are you marketing? Are you improving? Are you raising rates? I mean, your prices and things like that. And two more, cautions in that yellow box. State rules vary. As I told you earlier also, California charges that $800 minimum franchise tax, whether you profit or not. And the state nexus, that's another thing, a fancy term, meaning your business can owe taxes in more than one state. So the connection. So depending on where you operate, where your clients sit, and where the income is sourced, also, the state taxes will apply. Remote consulting across state lines, that's a conversation, to have with your tax consultant, tax advisor, I would say. And friends, don't confuse tax filers with tax planners. Don't confuse tax filers with tax planners. Not all tax filers are tax planners, but all tax planners are tax filers. Now, here is my philosophy at iLead Tax, and I will repeat it until you are tired of hearing it. We do legal tax reduction, aggressive planning. Yes, but always within the four corners of the law. And sometimes, clients say, Nanda, claim kar do, मैं देख लेता हूँ, I'll take care, when the notice comes and all. I say, I'm okay to lose you. But I cannot lose that credibility. It matters. It matters. A real business with real activity gets real deductions. A fake business with fake deductions will get real penalties. So stop listening to people who say just LLC खोल दो पूरा claim करो. That's a very wrong doctrine. Okay. Now, LLC versus S corp, which is right for your business? Let's say it's decision time. Your spouse is after watching all this so far, she says, "कुछ तो भी करेंगे जी, ఏమైనా చేద్దామండి, ఏదా సేల్ అన్నాము." So your spouse is starting a business now, LLC or S corp. Let's understand this properly, because choosing wrong in either direction will cost you money. Now, here is the headline. Most L2 businesses should start as an LLC and only consider the S corp election once profits justify the added complexity. Let me, walk through the table that you see here. See, setup is LLC, very easy. File the articles of association with the state where you want to form the LLC. Get a EIN, employer identification number, done in days. Now, when it comes to S corp, moderate. It requires a formal election, with the IRS. There are some forms like 2553 and all. So, next, best stage, LLC shines in the early, low profit stage. S corp makes sense, after meaningful profit growth. Third, payroll. Now, this is the big practical difference. See, an LLC owner takes money out freely, no payroll needed. But an S corporation owner must run payroll and pay themselves a reasonable salary. That means payroll software, quarterly filings, W2s, real administrative work is involved there. Next, self-employment tax. Now, here is why people love the S corp. In an LLC, the entire net profit is subject to self-employment tax. That's FICA tax, the Social Security and Medicare, roughly some 15.3% on top of income tax. But in S corporation, you split the profit. Salary is taxed with payroll taxes, but distributions above the salary are not subject to self-employment tax. That's the beauty of S corporation, and that split can save you thousands of dollars, every year. Hmm? Next, compliance burden. LLC minimal, S corp it's higher. Payroll, elections, then a separate corporate return 1120s. So now when to switch? See the general zone on this slide, net profit around 50,000 to 75,000 or more per year. Below that, the payroll and accounting costs usually eat the savings. And now the red box. Friends, this is the trap, I mentioned earlier. So let me say it clearly, The S corporation has ownership restrictions according to the Internal Revenue Service guidelines. Shareholders must be US citizens or resident aliens. I told you, green card holders also. An L2 spouse who has not yet met these conditions, let's say, she's a non resident alien and she tries to make an S corporation election, that will become invalid. And the IRS can retroactively tax you as a C corporation. And this is where copying your friend's structure blindly goes very wrong. Your friend may be a green card holder, but you may be somebody, on L1 or H1. Now, the good news, most L2 spouses have been living in the US. They become resident aliens, like green card holders or citizens under the substantial presence test, relatively quickly. But verify first, then elect for S corporation second. Never the other way around. Okay. Now, when you should consider an S corporation? When you should consider S corporation election? See, let's make the S corporation decision practical, friends. With a simple model. The S corp advantage is the two bucket system. Imagine your business made $90,000 net profit this year. Now, as an S corporation, you split that into two buckets. Bucket one, reasonable W2 salary, say $50,000. This bucket pays payroll taxes, Social Security, and Medicare, just like any job. Bucket two, distribution, the remaining $40,000. The bucket does not pay self employment tax. That is the entire magic. On 40,000 of distributions, Avoiding roughly 15.3% of self-employment tax is meaningful money, thousands of dollars every year legally. But friends, and I say this as someone who has reviewed many returns, the S corp is not free money. Look at the three boxes here. One is profit threshold. Generally consider it, when net profit reaches 50 to 75,000 per year. Now, why that number? Because below it, the math doesn't work. Which brings me to requirements. You must run, real payroll. File form 25553 to maintain the separate records and pay yourself, that reasonable salary. Payroll services, bookkeeping, and extra return. These cost, real money and real time, every single year. Now, net savings. The self-employment tax saved must exceed the administration cost. If you save $4,000 but spend $3,000 on payroll and compliance, was the complexity worth $1,000? Maybe not yet. Now, what is a reasonable salary? See, the IRS expects your salary to reflect what you would pay someone else to do your job. Pay yourself $10,000 salary on 150,000 of profit. Hmm? That's a flashy audit beacon. The salary must be defensible. And again, the red box, you know it by now, the SPT, substantial presence test first. The form 2553 second. An L-2 holder who hasn't met the test cannot legally hold S corporation rules, S corporation shares, under the Internal Revenue Code. Every situation is unique. Run the numbers, with a licensed tax professional. Also, with somebody who has experience in planning. Again, I say tax filers are different, tax planners are different. So know this before you elect your tax guy. And this is exactly the kind of analysis we do in an iPlan session. We model your actual numbers both ways, and then we let the math decide. Now, give me a moment. Yeah. Now, retirement planning. Okay. Now, this slide is my favorite, in the entire presentation, because this is where, an L2 business stops being a side income and becomes a wealth machine. Now, here's the principle, a profitable business doesn't just generate income, it unlocks retirement vehicles that are simply unavailable, to non-earners. Let me show you, the 2026 numbers. Okay, straight from the IRS notice. Now, if you see here, the solo 401k, okay, for 2026, up to $72,000 per year. Now, let me break down where that number comes from, okay, because it matters. You contribute in two rules, okay, two rules. As an employee, you can contribute up to 24,500 for 2026. As an employer, remember you own the business, so you can add up to 25% of the net profit, net earned income, as profit sharing. So together capped at the $72,000 defined contribution ceiling, according to the Internal Revenue Code. And if you are age half century or more, an additional 8,000, catch up will bring it to $80,000. Getting $72,000 per year, tax advantage. Now, for a spouse who 2 years early, the family assumed cannot work, she's contributing almost like $72,000 for retirement every year. The SEP IRA, simpler cousin, the next one, SEP IRA, simplified employee pension, up to 25% of net self-employment income, max $72,000 for 2026. Less paperwork, but no employee deferral component. So you typically need higher profits, to reach big contributions. Third one, traditional, or Roth IRA, 7,500 for 2026, and if you are 50 plus, another $1,000 you can do catch-up contribution. So this is available on top. Now, why does this transform families? Think about a typical L1 household. The L1 spouse has the employer 401k. Okay, good, but one 401k for a whole family's retirement in America. Now add a spouse business earning solid profit. Suddenly, the family has two retirement engines, compounding in parallel. Over 20 years, that second engine, growing tax deferred, can be worth more, than the business income itself ever was. And here is the planning insight. The employer contribution to a solo 401k is a business deduction. So the business earns, deducts the contribution, reduces the family tax bill, and builds the retirement account. And this is what we call a triple purpose dollar. Have you ever thought about this? That the path to retiring comfortably in America might run through a spouse home office? Let that sink in, yeah? Now, let's put, everything together with a real world style example, Not a real client, of course, a composite, of the pattern I constantly see. So meet our L1, L2 family. Okay. The L1 spouse earns some $250,000 in W2 income. Excellent salary, right? But here is the W2 reality. Well compensated, okay, yet with limited deductions and high effective tax rates. Taxes come out before the paycheck even lands. Very few levers, to pull. Now the L2 spouse launches a bookkeeping and consulting business. The exact kind, that we discussed earlier. And generates $60,000 net profit in year one. Realistic. Absolutely, 8 to 10 small business clients on monthly retainers can definitely get you there, in our business at least. Now, combined households, 310,000, okay, before optimization. Now, here's the difference, between just earning 310,000 and planning 310,000, right? With proper structuring by a qualified advisor like us, this family may be able to, one, capture the legitimate business deductions like home office, equipment, software, professional fees, what I told you, reducing that 60K taxable profit meaningfully. Then two, maximize retirement contributions, across both the spouses. The L1 maximizes, the employer 401k. The L2 opens a solo 401k and shelters a large slice of business profit, deducting it as she goes. Then three, deploy the after tax savings into investments, building long term wealth, that a single W2 household has real difficulty replicating. Now, the outcome box says it carefully, and I will too. Now, depending on execution, proper structuring, it may help convert, the gross income into very good tax advantaged retirement assets and investment capital also, potentially reducing the family's effective tax rate. And see, the note at the bottom matters. See, individual results vary. The AMT exposure means the alternative minimum tax and the OBA provisions, the One Big Beautiful Bill Act, may affect actual outcomes also. At higher incomes, phase outs, and interactions, the refund or the due amounts, they get complicated, and this is precisely why tax planning advice is needed at this level. Hmm? Inshallah. So let's recap, where we have been. Work authorization um, confirmed, business ideas identified, LLC first, S Corp when profits justify it, and only after establishing the tax residency for S Corp. Okay. Retirement superpowers unlocked. Right. Now, before anyone opens a business tomorrow morning, we need the compliance checklist. Right. Let's see. Just a second. Chalo. Now, see, this is your action slide. Okay. You can take a screenshot of this because launching on the right compliance foundation is not optional anymore. It is essential. Okay. 6 steps in order. Okay. Before you accept your first client payment. Okay. Step one, confirm your I-94. Okay. It shows L2S. I told you go to that I94.cbp and all that website you see there. Pull your most recent I-94 record and verify the class of admission. It says L2S. That S suffix is your work authorization. If you re-entered the US recently, check the newest record. If it doesn't show the S, stop and talk to your immigration attorney first. The document, it is the foundation of everything. Next, step 2, obtain your SSN if eligible. Apply at your local SSA office. You will need it for tax filing and business registration. Then, practical tip, from my experiences, carry your passport, I-94 printout, and the L1 spouse documents. And if there's any confusion at the SSA office about L2 work authorization, politely ask them, to check their rules on guidance notes, because the rules have changed after 2021, and not every officer remembers. And sometimes what kind of knowledge they carry at the counters. Then step 3, uh, just a second. Step 3, register your LLC. File articles of organization in your state. Obtain your EIN, that's your employer identification number, which is like a PAN card, in India for your business. It's free, directly from the irs.gov. You can apply it online also, or take our help. We will be happy to apply for you. And register for state taxes as required. Please get the EIN from irs.gov directly. And don't share all the confidential information on some website and try to form a company. Always speak to a person. You see my video, you see me on a Zoom call when we talk. You can write an email to me. Make sure you are talking. Don't look for some online chat or those kind of things. I'm not against them, but I feel, they don't give that value what they charge for. Next, step 4, open a business bank account. Separate personal and business finances right from day one. You heard me say it on the warning slide also. This is non-negotiable, for IRS compliance and for your LLC's liability protection also. Then step 5, set up bookkeeping and invoicing. QuickBooks, Wave or FreshBooks, issue a professional invoice for every single transaction. Clean books are not just compliance, they are how you will know if you are actually profitable, or you can outsource it to us also. Then step 6, understand your tax obligation. See, three things change, when you become a business owner. Self-employment tax on your net profit, one. Then the quarterly estimated tax payments using Form 1040 ES, because nobody withholds taxes for you anymore. You have to take care of yourself. And then Schedule C on your 1040 on your tax return. Okay, if it's an LLC, you miss the quarterlies and the IRS charge you underpayment penalties. A very common, first year mistake. So do these, 6 in order, friends. Okay, and you launch clean. We are there, to partner with you in your success journey. You skip the steps and you will spend, 10 times the effort fixing it later. Trust me, cleanup engagements are how I know. Sure. Sorry if you felt, the video was long, but I keep getting a lot of questions. After a particular question, again, a follow-up question comes. So I compiled everything, and some of the peers, CPAs or EAs, they don't like me sharing, so much information online. But still, I love my clients. It's been 22 years in the business, so thanks for all your support. I'm making this content available. We saw so many immigration challenges, in 2025 and also at the start of 2026. I don't want my clients to suffer. That's the only intent. We are not charging any money for making video like this. If you want me to make video on any particular topic, please do let me know. I'll be happy to make a video for you. Yeah, and please do share it with somebody you feel they need to know about this. Yeah. Now, let me save you from the 5 mistakes, that I see over and over, with the first time L2 business owners. Each one, carries real financial risk. And remember, for a visa family, tax problems can complicate, immigration journeys too. Protect your business and your status also. Right? The first mistake is mixing personal and business expenses. The number one error. One card for everything. I'll sort it later. Accountant will take care. That later never comes, and you never want to hire an accountant. You feel, oh, I can do it in Excel, I can do it in AI. That's wrong. That kind of approach, can destroy the legal separation of your LLC, and it may also trigger IRS scrutiny also. One business account, one business card, done. It keeps things simple. Two, claiming fake or inflated deductions. The family vacation becomes a business trip because you checked email at the beach. Huh? No. See, deductions must be legitimate, documented, and business related. See, my rule, if you would be uncomfortable, explaining it to an IRS auditor face to face, don't claim it. Any item, that you want to claim as an expenditure uh, on your business tax return, if you cannot explain it to an IRS auditor face to face, don't claim it. Next, mistake 3, accepting cash income without records. Someone pays cash, for tutoring and it doesn't count. It counts. All income must be reported. Now, unreported income is not a shortcut, it's a tax fraud. And for family with a green card application in the pipeline, that risk is unthinkable. Report everything. Next, mistake 4, no payroll after S corporation election. People here, S corp, saves taxes, file the election, and then take all the money as distributions with zero salary. The IRS requires reasonable compensation. Skipping payroll is one of the major audit triggers, for S corps. If you elect, you commit to payroll. Period. Then mistake 5, copying someone else's tax strategy blindly. My friend in Texas does it this way, Nandaji. See, your friend in Texas, he has no state income tax. You are in California, very different. That too, high tax state. Your friend is a green card holder. S corp is eligible from day one. You may not be, a green card holder yet. Every family's income, visa situation, and state rules, are unique. Get personalized advice or tax consultation. No, I don't know how many of these mistakes, you have already done. I'm not sure, how many of these mistakes are already done. Now, see the cross border angle. The Indian families, about families. Uh, if you have, roots in India, please give me your complete attention. I know it's a long video. I encourage you to, watch 30 minutes today, 30 minutes tomorrow, or something like that. If you're not so, uh, if you're not so, comfortable taking so much of information. Now, if you have, roots in India, your Indian assets create a cross border reporting landscape that must be managed every single year. Let me translate each box, into a simple language. Indian accounts and F bar. Hmm? Most of you have NRE or NRO accounts. An NRE account, holds foreign earnings repatriated to India. Interest is tax free in India, right? An NRO account holds India sourced income like rent, dividends, and interest is taxable in India. Now, here's what many families don't know: the US taxes residents on worldwide income. So, even the tax free NRE interest that is tax free in India is fully taxable on your US income tax return. And if the combined value of all your foreign accounts exceed $10,000 at any moment during the year, even for one day, you must file the FBAR, the foreign bank account report. Now, it's not a tax that you're paying, it's just a disclosure, it's just a report. But the penalties for missing it is severe, genuinely severe. If you use AI tools, just check, ask Gemini, you ask Nanda, ask Gemini also. Penalties for missing FBAR, penalties for missing FATCA. Next thing is FATCA. Second, separate disclosure form 8938 filed with your tax return when foreign assets cross higher thresholds. Yes, two different reports for the same accounts. Okay, welcome to the cross border life. Now then, the third one, Indian investment PIFIX. So I made some 6 videos, I guess, on PIFIC. Thanks to all my clients, who made it successful, and my sympathies to CPS who called me and said, am I tied up with IRS or what? No. Anyway, that I'm scaring the clients. Anyway, I was just making, some educational videos, that's all. Now, this is the big one, the PIFIX. The Indian mutual funds are classified as PIFIX, okay, passive foreign investment companies under US law. So, in simple language, the US tax code punishes foreign pooled funds, with special harsh tax rules and a complicated form 8621 for each fund. I explained it so many times, but telling you once again, okay, that innocent SIP you started in 2012, it may be a genuine US tax problem today. If you hold Indian mutual fund, this is not a do it yourself situation. Oh, I can do it with AI, ask Gemini and all. No, get a licensed tax professional help before you sell anything. Next, the India rental income. The flat in Bangalore, that's rented out. Okay. That income must be reported on your US tax return, even if tax was already paid in India. The good news, foreign tax credits may offset the double taxation, but it must be reported. Next, PPF and EPF, Indian Provident Funds in India, beautiful, tax free. In the US, the treatment is complex and often misunderstood. These accounts generally don't get the tax free treatment here, and they may carry their own, reporting requirements also. Next, the return to India plan. And if your long term plan is to return, exit planning, and then all these expatriate rules and treaty elections, they all matter. Okay, leaving the US tax system has its own rules, so plan the exit as carefully as you planned your entry. Now the key point on this slide is uh, one I stand behind completely. The cross border compliance for Indian families, it requires a licensed tax professional with a planning mindset, not a general tax preparer, seasoned. Just, like I call them, CEOs, CEO preparers. Christmas to Easter only. Christmas, Easter only. So they'll be there from December to April. So don't work with, those kind of preparers for your own good. A preparer who has never filed an FBAR or PIFIC Form 8621 cannot protect you here. And this is exactly what Iley Tax LLC, specializes in. It's our daily work. And note, the 2026 OBBA update, your US planning must now be modeled, alongside the permanent individual rate extensions and the modified SALT parameters also. Now it is $40,000 SALT cap, for Maggie, for modified adjusted gross income up to 500K, together with the Indian PIFIC rules. Okay, so take care about the PIFIC. Okay, and if you have still not signed up, with us for the tax planning session, I encourage you to sign up for our phase 2. Okay, because in tax planning, when you act, uh, matters as much as what you do. And at Iley Tax, we organize the year into 2 tax planning windows. Phase 1 tax planning, it runs from Jan 1st to June 30, the first half, the first phase, when we set the strategy early. And phase 2 tax planning runs from July 1st to December 31st. And now you are watching this and thinking, Nanda, it's already the second half of the year. I missed phase 1. Should I wait for just wait for the tax filing season? No, please no. That is the single most expensive mistake, in personal finance, waiting until filing season. Because look at the box, on this slide. The IRS does not offer extensions on strategy, only on filing. Here is the reality. See, once December 31st passes, most tax saving levers for the current year are permanently closed. Withholding adjustments closed. Most retirement deferrals closed. Business setup for this year gets closed. Charitable timing gets closed. So when you meet a preparer in March, they are a historian. They can only report, what happened. They cannot change it. I meet families, every filing season. You say, if only we had talked in October. Gosh, a family discovers in April they owed nothing extra. If they had adjusted withholding in August, a spouse who could have opened a solo 401k by year end and sheltered $30,000 learns about it 4 months too late. Same facts, same family, completely different outcomes. Purely because of timing. If not I lead, some other lead. But take time for planning. Change that mindset, in the society also, in your fraternity, in your group, in your circle also. आई एम ऑन W2, मेरा क्या रहेगा? एक बार देखे तो देखे आप. एक बार कंसल्ट तो करें आप. Many families, they genuinely underestimate how much a structured planning session in the second half of the year, also they can accomplish. From adjusting withholding to accelerating the retirement contribution to setting up the L2 business properly before January. So if you missed phase one, do not wait. Phase two is exactly for you. And the next slide, shows precisely what a phase two, session covers. So here, we'll be doing your W2 withholding review. We check, what's been withheld so far against what you will actually owe and adjust for the remaining paychecks. This avoids underpayment penalties and the nasty April surprise. Just, some 15 minutes of work, potentially thousands of dollars, get saved. Then, two, the RSU and bonus tax estimate. Tech families, listen up. RSUs typically have tax withheld at a flat supplemental rate, often 22% is minimum federal, while your actual bracket may be 32 to 37% also. That gap is number one cause of the why do I owe, $25,000. I get emails on that. You never consulted me for tax planning. You get the tax draft from my team, then you send an email, Nandaji, what I should do, what I can do now. Well, on top of that, you will have estimated tax penalty also there, because by year end, if you don't pay 90% of your taxes for the current year, you get estimated tax penalty. We model your vesting and bonuses before they hit the paycheck. Third thing, L2 business setup review. Everything from today's video applied to your family, structure confirmed, deductions on track, quarterly payment scheduled, all before year end. अच्छा होता है ना, organized. Then four, retirement contribution planning. Maximize the 401k, IRA, solo 401k, SIP IRA before December 31st deadline. See, remember, employee 401k deferrals must go through payroll during the year. You cannot backfill them in April. This is a use it or lose it window. याद रख लो. Then five, state tax planning. Especially critical if you moved states this year or work remotely across state lines. Two states may both want to tax you. Residency planning prevents double trouble. If you are living in states like Kentucky, Michigan, New York, Ohio, Pennsylvania, you will have city taxes. Then states like Iowa, Indiana, Maryland will have county taxes. Plan it properly. Then the OBBA deductions audit. New law, new opportunities. We review, that personal vehicle loan interest reduction up to 10,000 cap under the One Big Beautiful Bill Act, charitable giving adjustments, and the expanded $40,000 SALT deduction cap. So, every OBBA provision factored into plan before December 31st. Even the foreign account tax compliance, I told you about FBAR, FATCA, PIFIC reporting. You don't file them, the penalties are huge, yeah. Fine. So, thank you very much, for staying with me this far. We have covered a lot today. So let me bring it home. You came to America on a visa. You work hard, harder than most people around you will ever know. You send money home, you raise your children between two cultures, and you carry, the quiet stress of a life that sometimes feels temporary. But hear me, your finances do not have to feel temporary. The law, written, official, black and white, gives your family tools most of you were never told about. An L2 spouse who can legally build a business, deductions, solo 401ks. It's a second engine, for your family's future. The only question is whether you will use what the law gives you. Remember, the difference on this slide. I want this to be the sentence you take away today, if at all you are writing it down. The tax filing tells you what happened, but tax planning tells you what to do next. Getting? Tax filing tells you what happened. Tax planning tells you what to do next. Filing looks backward, but planning looks forward. Which one builds wealth? If you missed phase one, with me in before June 30, it's not too late. Phase two, runs right now, July 1st to July 31st. In your iPlan session, we optimize withholding, retirement, contributions, executive compensation, cross-border reporting, and year-end strategy. All before the December 31st window closes. So here's your action step. The Calendly link, is in your screen and in the description below. Calendly.com/nandhakumar/KV/iLeadTaxPlanners. iLead_tax_planners for the tech guys. So book your iPlan session with me directly. Bring your questions, bring your spouse. There's a family decision. And bring that L2 business idea also. We will review your complete picture, using our iLead framework. Income, liabilities, expenses, assets, dreams. Yes, dreams. Because a tax plan that ignores where you are going is just arithmetic. You can also, reach us at ileadtax.com or email me at asknanda@ileadtax.com or call our US or India numbers. Both are on the screen. And connect with me on LinkedIn. I share planning insights there too. Don't just watch. Take the next step. Yeah. See, L1 brought you to America, but L2 can help you build here. 4 steps, simple enough to remember, powerful enough to change your family's next decades. First, know your rights. The L2S status authorizes your spouse to work and run a business legally in the US. Verify the I-94. Own that knowledge, okay? 2, build a structure. LLC first. Optimize later, and compliance and record keeping from day one. Foundation before any decoration, with the S corporation and all. Then third thing, plan the taxes, deductions, retirement accounts, cross-border reporting, because strategy beats surprises. Strategy beats surprises, or rather shocks. Fourth one, grow the wealth. 2 incomes, 2 retirement accounts, a real business. That, my friends, is a family financial engineer. Plan before you earn, structure before you scale. Don't just file taxes, build a tax strategy. Plan your taxes. So if this video kind of opened your eyes today, do 3 things for me. Like the video, it genuinely helps this information reach more families like yours. There are so many people who may not know so much information, and they may not even think of scheduling a call also with an accountant. Then 2, subscribe and hit the bell icon. We publish practical tax education for the Indian American community almost every week until I'm busy. And share, this third thing is share this, with one L1, L2 family in your circle. You might change the direction of their finances, just with one link, being shared to them. And if you're ready to go from watching to doing all that I said, the Calendly link is in the description. Phase 2 is open, and December 31st is not moving still. So this is Nanda Kumar from iLead Tax LLC. Thank you very much, for spending so much time with me. Seriously. As much as you love your family, we love our clients. Plan with intention. Take care of everything that I've told in this video, and see what all you can do. Yeah. Until we meet again, take care, love you, and have a great week ahead. God bless you. I'll talk to you soon in the tax planning consultation call. Bye-bye.